What's up, everybody? Good morning. Let's get ready to go. CPI day already priced in, coming in not so hot. Tastes a bit rational outside of DD bands right now. That's a cautionary tale. I'll be trading, but trading small, but we're going to open rational, which is great. Anytime we poke out and pop back in, I always take it easy. Small trading day, you know how it goes. You all know the drill. Done this a million times before. Day 15 of the challenge, no losing day yet. Let's get ready to go. Good morning, y'all. What's up, everybody? Good morning. Getting ready to get started here. We had CPI day, so I'm going to do some calculations real quick. Show you some of my pre-market stuff. We got about 20 minutes till things get going. I'll be live on a podcast this morning with Wolf Financial and the gang on Twitter, so we'll be there. I'll be kind of holding a drink in both hands, I guess, the way we say it in the Twitter world. So I'll be there. I'll be here. You can hear me. I'll leave the mic unmuted. So we'll chit chat, but let me do my calculations. I'll show you some of this risk interval stuff, pre-market catalyst. You know how it goes. We'll make sure that everything is set and ready to go for today. Today's going to be a trade small day. I can already tell right from the beginning. I'll talk about why that is and why I am not really too concerned about the CPI numbers came out. They were highly predictable. We said they were going to go up a smidge, and I'll tell you how we can make those predictions. So click that like button while I get ready and get all my stuff done, and I'll see you in just a second. Okay, technique I'm going to demonstrate really quick is called the risk interval. This is one of our favorite little techniques here. This is one of the things you can do to decide if the market's already priced it in or not. This is the number our bot gives you, and what we're going to do is we're going to go to a tick chart, a little pre-market fun, pre-market warm-up. Go right to that moment of impact. You can see that the CPI numbers came out. Let's find out exactly when. So there's a little bit of a delay sometimes on these tick charts because it batches them in. So it looks like the information came out right about there. And let me double check that. Opening candle, find the exact moment. I'm using Thinkorswim at this point in time. So it's right about 590. It's in the candle chart right about here. And we're going to go ahead and mark that. We're going to mark it with our risk interval. This is a distance of NASDAQ is 109. And with the S&P, it's 29.5. This is a very cool trick. This is an exploit in futures. I will teach you some of this. Let's put it right at 41 rounds nearest tick. Give it a label. CPI catalyst, a CPI event. And it'll be like the rational limit. And we'll do one to the downside, and we will do one to the upside. Very cool trick. Outside of the span, it's doubly, that's really a word, irrational. You guys feel free to hang tight for a little bit. Smash that like button if you guys can scroll down to that really quick. That's the free thing. We love you. Good morning. What's up, Bright? How to irrational, please. We never touched any DD bands at all. Yes, we did. It was close, right? It's not irrational. It was a smidge, like a hint, right? So when it's a hint, I still trade with caution. If it was large enough, CPI event, anchor point, rational. I hate that rational and irrational. That second syllable is sometimes sneaks away. Irrational. Right? Sounds the same. It sounds the same. Should we invent new words for this? We can call it oopsies and noopsies. That'll work. Okay, so here's the limits, right? Window of opportunity closes right down here. And so therefore, off the event, if there was a catalyst, right, it would move that distance and lower. See how it bounced in that range and bounced in that range? So the idea is once we effectively came back to the anchor point, it's already priced in. So below here, it can become a little extra volatile. So these are your numbers right here. Let me go ahead and post these in chat. These will be posted in our Discord for those that want to pay attention to this. Here's the QQQs. This for you, Pens. I got you, man. Wait. Okay. So I'm gonna keep an eye on that. Let's get those DD bands up. Give me like, oh. What's up? What's up? What's up? Good morning. They automatically create rational status. They do not. Only if they go a certain distance and the anchor point is still untouched. So it closed itself out today. We'll talk about that in just a little bit. Unless slam down my breakfast here. Hey, good morning. So we have, so when you look at the numbers that go into the inflation these days, wage inflation was mostly caused by people losing their jobs during COVID, right? And immediately everybody got laid off. And so when the first adventurous person goes back to work, they have an abundance of jobs and they're the only worker and they can request any wage they want to the most desperate of employers, right? And that caused the wage inflation that every sector existed. For a couple of years, that stabilized while the market got back to normal and the transportation sector got back to normal and we stocked the shelves with goods and raw materials were plentiful again. But now we're experiencing what I postulated a couple weeks ago was called sector wage inflation. It's very easily seen in certain sectors like oil and gas, healthcare, where they can't hire people fast enough. There's other sectors where they can't fire people fast enough, like tech. So what you actually were seeing was a weird the three things that you can go into forecasting wage inflation. This is a trick. So if you guys want to learn something about how I look at it, this is a neat little way to see the CPI without actually having to wait for the numbers. And if the cause is wage inflation, right, one of the biggest causes, and you know because Powell says that kind of labor market every time he talks, is that the JOLTS, which is one report that talks about the available job openings that are actively trying to be filled. You have the first time unemployment filings, which are people that pretty much got fired that week and immediately filed for unemployment. And then the continual unemployment filings, which are the people that haven't got their jobs back, like further weeks onward. And this is the time we had all three of them go up, which means you have we have open jobs trying to get filled, which means you fired somebody that you didn't like and you want to fill it with someone you do like. So companies have to pay a little more for the better worker. You have first time unemployment going up, which means people got laid off. And you had continual unemployment, and let me double check that. But that also went up, which means people can't get their jobs back. So it's kind of a weird thing where you have more jobs available and people needing jobs and not getting them. So the companies aren't getting the efficient labor they want, or some sectors are starving for labor. Some sectors can't fire people fast enough. And when I looked into all the data and dug a little bit deeper, that's actually what's happening. And that's why you see some sectors stronger than others right now, because when you hire more efficient workers in the front end, you pay more money for them. That's going to hit your bottom line next earnings season. But the efficiency turns around and comes back around a couple quarters later. So at this particular time, with all the data, the thing I said yesterday was, well, probably the CPI is probably going to go up in a second wave of what might appear like inflation across the board, but it's just going to be spot sectors and it's not going to really make a lot of a dent into the stock market. And today we opened or the CPI came out. It spanned what we call the risk interval in Rocket Scooter, which is a futures span. It's like the expected volatility in futures in a way, if you want to think about it like that. And we didn't exactly pass that boundary, so it means the market didn't really get a shock as far as tradability. The expected effect and the expected volatility both came in under par. So it's a good sign that the CPI was already priced in. And that's probably how I'm going to trade it today, is just kind of ignore that it even happened. And it's coming in, slightly elevated, but I don't think that's enough to really be alarmed. But really is going to matter is, going forward, really everybody, all eyes are going to be on FOMC. I really think that's the only catalyst coming up, or event coming up that could be a potential catalyst to move the market. So this is coming in a wash for me and at par. Those are my thoughts on CPI. Four minutes till market opens. We're looking good. Okay, I want everybody to go to my Discord real quick. We have a little thing that we're doing. If you haven't gotten into our trial, our extended trial, we had our kind of kickoff sessions yesterday where we started getting things fired up. How did y'all like it? It was your first day through one of our training sessions. It's quite different than what I think you'd expect, right? We do a little bit of coaching, psychological training. We get you ready, amped up, and prepared for what's coming ahead. We don't just come in there and start looking at charts, right? We're training you how to think. Did you like yesterday's session, your first time there? Was it a surprise? You don't spoil the surprise, kind of what we do, but did y'all enjoy it? First timers? No, it's not a sit-out day. Today is certainly not a sit-out day. It's a trade small day. We're gonna start diving into the content, the calculations, the techniques, the tools, little by little, right? We will do that, but we're gonna introduce you to a point where you won't forget it. Okay, so we're on the space this morning. Going to, if you guys go to that Discord, if you need the numbers. I need to let him know really quick. Talk to my guys on my team. Okay. Market opens in 1 minute. It's gonna get ready to go. So not everybody spam refresh this morning. I'm gonna make sure we didn't get the patch in, so just follow my lead. We did upgrade the servers though to handle y'all's trigger fingers here, but okay, we're open. Let's get ready to go. All right. CPI. So CPI pretty much already priced in. We're going to take a look at what do we have. All right, we are. I'm just going to make sure I come in here and mark this up. So we might be irrational outside DD bands, which is okay if we get there. Nasdaq is pressing through DD bands right now. I'm just going to estimate where we are in the S&P. Right there. I'm going to just kind of draw right over here. It pushed right to the edge. I'm estimating just quickly. QQQ. So yeah, we are irrational outside of the DD bands. This is it. Let's make sure we don't have anything on the news today. Everybody get your liquidity maps out, ready to go. Hold on 1 second. I can hear you. Yeah, I'm not going to touch this just yet. So we are slightly outside the bands on Qs. So I'm going to put this right about there. Right there. I'm just kind of estimating right now. Let's double check VIX, the first thing we're going to look at today. Make sure the VIX is not doing anything alarming. BLU on VIX. And we are one of the special irrationals, and we will cover that today. VIX on a call wall is an irrational. Anytime UVXY today is above 5, keep that in mind. Irrational above 5. All day long. This rule lasts. Watch this level, okay? It should reload. You're good. You guys can refresh now. It's okay. Just hit F5 on the platform to get to refresh. It's something we're working on right now. We have a monthly hedge pressure break as well. MHP break, also irrational rule. So I'm not long until above MHP on a BSD. Let's pull this up. So I'm going to get this. So this might end up forcing me to sit out today. A BSD has no green arrows, so I'm looking for resistance against regular hedge pressure, which is right here, and continue to fall. If the CD comes in positive, there is a predictable-ish scalp down from here to somewhere there, but I am not taking this. Okay, not at all. Oh yeah. Oh yeah, there's we have 3 of our rational rules triggered right now, the 5. So rational rules, Rocket Scooter is the the world's first risk management themed trading platform. So what we have are tools that allow us to see if the market is unstable and trading beyond a range where we think things are going to behave as expected. Irrational markets, we don't try to rationalize. All indicators are turned off right now. All things are not being used. We had a monthly hedge pressure break on SPY at 410. We broke our DD bands, which is a futures thing, which was right at about 4120 on the S&P. And the UVXY, or the VIX, had a call wall break as well. So you had 3 reasons for this market to be trading down. This is a glorified, essentially exemplification of this entire CPI not being digested well. And I thought they would, Wall Street be okay on that. We need to get above 410 on the S&P for me to think anything is worth taking, but the market is looking really bad. Resilience is low, so we're getting that downside push. What I want to see is that ratio, the bull bias ratio coming through. If that comes in greater than half, we might hold 408, but I think 410 to 408 right out the door is likely the move we're going to get. I'm not going to short it, but I'm certainly not buying right here. I'm going to let it dip a little bit further because we broke through both DD bands, the NQ and the ES. So 3 of the 5 irrational rules are on right now. So when things are irrational, I either sit out or trade small. So to me, this is not a dip for me to buy, and I'm gonna watch, look for some opportunities, and see if I can't find anything, at least on the stock side, that's showing signs of just really nasty bearishness. We're waiting here. Let's look at this. Any stocks on the downside? You guys, okay, so here's what you guys need to do. You need to log out and log back in your platform. And that's it, because what happens is when we push a new update, you always have to log out and log in. Yeah, I just sent him a note about that. And this is something that we're learning as we've had, as of this week, Rocket Scooter gained 500 people using our platform right out the door. So thank you guys for all coming, supporting the stream. Click that like button while you can. While we're sitting here chatting, I'll give you a little thing talk about. We are in an irrational territory. There are 3 of the 5 rules triggered and doing absolutely nothing. Monthly hedge pressure resilience is negative. Now remember, irrational rules, we don't consider liquidity map. We don't consider the CD number. Hold on one second. Okay, so let's take a look at the DD number. Okay, so 0.70 means we're likely to find support inside of here. We keep that eye on the EVXY. Whenever you have irrational signs, this goes away, and this I take with a grain of salt, because what happens is you can't assume that resilience is going to show that stocks lead the market, which is the times that I know the stocks will lead the index. I will use resilience as a leading indicator. Markets are rational. I'm not convinced that the SPY isn't moving on its own to create irrational moves. So at this point, even though these are negative, these could be lagging the index instead of leading the index when irrational. So when irrational, you don't necessarily assume that they're going to lead. Can you hear our kittens? Yeah. DD populates once we have 90% of the tickers. I put in a ticket to make it 50%. Okay. So right now with this yellow number is the tiebreaker here at yellow. I'm taking it with a grain of salt. It is hugging zero and slightly below. It's not a good sign. It's not a good sign that this is going to hold. Now, you don't normally break and crash through monthly hedge pressure that easily, but we are very close to monthly expiration. So it is typically in nice bull runs or non-bear runs is when you will see monthly hedge pressures slightly break. This is a massive problem if you break through 410. So the bull side tells me that if we break through 410, 408 is likely going to happen. But right now, nothing's looking good. Let's find some bear setups right here. Let's look at, I'm going to run the scanner for all bear setups, but actually let me remove these and look for bear breakdown. So right at MHP, let's find the ones that are broken down. So I'm going to do is click the scanner, HP breakdown, MHP breakdown, and that's it. Okay, so we're going to look for some stocks that are kind of pressing the bottom. Target, Kroger, Yep. So everything's just looking nice and stable. I'm kind of keeping an eyeball on some sectors that are experiencing some weakness. We would say the consumer staples and consumer discretionary and tech are experiencing most of the weakness, I would say, from the wage inflation. Let's pull a Tesla real quick. Don't know how you, whether it's rational or irrational. Have you been to, we just started our 6-week training course. Have you been to it, Kananeko? That's the whole point. You'll learn by taking our training course. So our training course, our monthly subscription to Rocket Scooter's platform is $199 a month. But if you do our extended trial, which literally is going on right now, you get for $35 a month. This is a once in a lifetime thing. We're batching in as many people as we can to go through our training program. $35 a month for 3 months. And you can learn everything we do. If you don't know what irrational is, that's great because we haven't got to that class yet. You'll get to it little by little, I promise. Oh, sorry, I had my mic muted. If you're from Matt's group or Ashton's group, you get an even better deal for the subscription, not for the extended trial. It's the same extended trial, but Tesla's holding that monthly hedge pressure. Okay, so irrational or rational, I promise. Everybody do that. If you want to learn what we're teaching, $35 a month for 3 months and commit to 3 months, you will learn everything that we do for nothing price. You get the platform for free. It just covers your data. 35 bucks. Live streaming, candle data, everything, and all the calculations and tools. And in 3 months, within 3 months, you'll be able to trade futures in Rocket Scooter. That's the next step of what we're doing is futures trading. So everybody click that link. This BRLU, no. So here are the rules, right? When I say the word irrational, everybody in chat, if you were there for yesterday's lesson, what does irrational mean? Now we're fine now. The market's good now. But what does irrational mean? When you hear me say those words to me, what did we learn yesterday? Does anybody remember? Take it easy. Move to the sidelines. Trade small. Don't trade. So even though it looks like it's moving, all signs are not looking strong-ish just yet, even though it could get strong. We're going to have some waves through here. Resilience is negative. Monthly resilience is positive. So we are seeing resistance here and support here. We are now locked into this range. This usually leads the market. If this white number is above 0, then this is support in rational days. But because you took a glimpse of irrational, this not necessarily leads anymore. So anytime you stretch too far, you take it with a grain of salt. Things are improving, but this resilience number being right at 0 is not letting me chase this right now. I'm going to sit out and let the market stabilize. Yeah. That's small if anything's done at all. I didn't do anything because the 2 resiliences were negative and it looked like we could possibly like monthly hedge pressure, so I didn't touch it. Right? You have 5 different indications that can indicate irrational market. These bands on futures are the first of them. Being below or above these other green bands that I drew for the catalyst for the CPI event would make it irrational if this thing called the anchor point was still untouched. Now you can see that what happened with the S&P was that we moved and returned right to the same area. The CPI was effectively priced in already. So this is no surprise to Wall Street. Whenever you move and come back, and the easiest thing to see that, especially those of you that are looking at the index, is go to a tick chart. And while you're here, everyone, smash that like button. I bet you, I promise you something. If you hit the like button, you will get Santa Claus come early this year and bring you a knowledge bomb. Ready? Click it. I'm going to teach you something. The coolest thing you've ever seen. No, not at all. The coolest thing you've seen in the last 10 minutes. Okay, ready? Okay, everybody. Right here. Anytime an event comes out, I mark the anchor point, the start of the event. If you return to that anchor point after the news comes out, it's no longer pricing into that market. So if you say the word CPI after 2 minutes, then you don't understand trading. And that's what we tell you. CPI, forget 100%, forget about it. It no longer applies. We are a step ahead of others that are trading. CPI, if it mattered and it shocked Wall Street, we would move and not return. This is what's called the efficient market hypothesis, meaning that all available information is effectively priced in. You assume people have inside information, data leaks, whatever, but Wall Street accurately predicted what the price would be on the onset. Doesn't matter if it's trading up or trading down. If you move and return to an anchor point, you see how cool this technique is? Even look at the NASDAQ. Look at this. You see how strong this pivot is at the anchor point? That's from our catalyst class. It's one of the 5 irrational rules. And we'll cover that maybe today because it's a good example of it. But we'll talk about like one rule a day while we teach other techniques. So today we're going to dive really deep into our classes. Like I said, we just passed 500 new people coming either through the free trial or through our subscription or the extended trial this week. At 500 new people this week. That's why our stream went from 60 people to 250 people. Everybody needs to get in on this while you can. This is a once in a lifetime. You will be able to join our program for $35 a month. It's a $200 a month subscription, and it will return to that at the end of the program. If you stay till the end, we'll give you a half price off for the rest of your life as a reward because you're piloting our new training class. It's a 6-week-long program, and we'll cover all of this. This is a freebie today. Anytime you break out of a certain range, which I draw these boxes, it becomes irrational until you return and kill out the anchor point. From this moment in time, CPI is no longer affecting the market. Do we got it? Throw some rockets in chat if you got it. Because that is exactly what happened. If it was a shock to Wall Street, the price would change drastically and everybody would react in one way or the other. We didn't see that, right? Okay. So right now the market's moving on its own mechanics. That's it. Right here, it's not looking so hot. So what I'm going to do is I'm going to look for this to be an entry point somewhere in here. Now that the market is stable, again, we are inside these DD bands. So outside of these bands is another irrational rule. Because I know that resilience is negative, and I'm assuming that it might not be leading. I'm going to sit out in case we blast up. And I'm going to like to get in case it falls down. And I'd like to get in somewhere down in here to maybe trade back up to that anchor point if I can find something. So again, we need to watch UVXY. Again, another technique. We're in the zone there. That's good. We're outside of the irrational signal here. So anytime you break through any hedge pressure, it's irrational. So we are already irrational on monthly hedge pressure break on VIX. So volatility is going to be irrationally collapsing. The market could squeeze all the way up and break the band to the upside. That's possible when you have a volatility collapse. So right now, your premiums are going to get crushed today if you buy any kind of options leading into CPI. And that's another lesson. You're getting a lot of little lessons today, just kind of thrown out here. But we want you to try that extended trial. Like I said, this is the link for it. For $105 for 3 months, you get a $600 package, right? And volatility is collapsing like crazy. Let me see what QQQ is doing. We do have a liquidity pocket here. I might actually target that. Let me get like a nice little red candle in the S&P and maybe take a couple just a couple, right? Nothing crazy, just a couple. This being negative, I don't like right here. I'm definitely not shorting, so I'd like to kind of dig in somewhere down in here. I'm going to take a cautionary step back. Pseudo is correct. Today's volatility expiration. So we have VIX options expire tomorrow morning, monthlies. Your VIX contract rolls over today. Nice, nice. So we have a you can see right now, hey Vegas, how's it going? Oh, she's probably busy. So we have a volatility collapse through monthly hedge pressure. So this is a cool irrational signal, which is about to show likely into a collapse of premiums if we do have all this pre-baked volatility going the CPI go away. And the volatility collapse like this close to volatility expiration, right? Tomorrow morning, VIX monthly options expire. And you're going to see, this is very possible that this becomes a very strong V-shaped move that goes higher to higher highs. I'm still not comfortable trading it just yet. But with that volatility completely collapsing, you might see a short squeeze today because it's going to be coupled with those volatility expiration mechanics. So we might see a giant green V today that S&P pushes 4180, 4190 and higher. I'm not in the trade yet, but it is very possible. You have a liquidity pocket right now, which is another rocket scooter calculation that shows a balance point at 306.5 on QQQ. So the NASDAQ itself is about to find balance. And I'm watching other stocks like Tesla and some others that have been moving to the upside. And I think they're all hitting limits as well. So I think we're going to fight here for a while. But I think by the end of the day, I wouldn't be surprised if we do push higher highs just on this volatility crunch. It's going to be an interesting thing to see shorts get squeezed and chase people into the longs leading into tomorrow morning. So interesting to see that. Cool dynamic. Oh yeah, absolutely. So what you're seeing right now, you can, if I give you the overall storybook level, the bullish positions are still in. That 0.7 DD shows the market has a bullish bias. The resilience number, however, shows a possible strength to the downside from the market gapping down into the open. So what you're seeing is that most of the stocks closed yesterday with bull bias, but the pre-market response to CPI was bearish enough to make most stocks gap down and stay within what's called the redistribution zone. This resilience number that we have is a number that looks at arbitrage in the S&P. It's a market cap weighted instrument that we have. We created this, and it looks at what's called the rate of implied hedging. And what that is to show, essentially, it's a gap fill predictor of the S&P. It's a really cool tool. You're all welcome to check it out on my stream. In normal rational days, stocks typically lead the index. They'll move first and the index will trail. And so this tracks the arbitrage. If this resilience number is positive, it's very simple. Then the S&P moves to fill its gap to the upside. Like if we gap down, it would trade up, which is what it just did. If it's negative or below zero, then S&P will continue to gap and go. So we designed it to look for like a gap and go kind of predictor. And so, as you said, the top of the box just shows the S&P filled its gap. And in irrational days, however, we turn off all tools, no matter what you use. It's one of our tricks here to show that indications or indicators are going to lag or delay or not work as intended. So with those irrational signals this morning, I'm not using it as a predictor anymore. I'm using it as a caution. So I'm kind of avoiding the market because it's not pushing very far past zero, even though we're getting a V, which means the market's likely not to push straight up. But then we have volatility collapsing, so the market may push straight up on something you can't predict, which would be a short squeeze. So you piece it all together, market's very bullish going into today. Stocks gap down or filling their gap. Enough market cap, just enough to get the S&P to fill its gap, which we saw. And right now the S&P is trading up. It has no indication it needs to continue up. But if it does, you're going to see giant green candles pop up out of nowhere that aren't going to trend up. They're going to be people squeezing out of shorts leading into tomorrow's VIX expiration. So this is the play-by-play before 5 of these things happen. And I can see now, I'm very trained in the rocket scooter principles. So I'm kind of spitting like in the entire trading program all at once, but that's exactly what's going on. So because it seems to be hard to predict and it's going to be choppy to the upside, if you even look at the candles right on the 1 minute chart, you can see that NASDAQ just had like 3 or 4 green candles consolidated, 3 or 4 green candles consolidated. It's not trending up, it's just squeezing up. So it's a perfect recipe for a short squeeze. And so it's not going to be an easy thing to trade, which is why I chose to sit out. So when I say I sit out and people say, why did you sit out? All those thoughts, right? Those are things we train everybody on. And those are things that came from my initial thought process before I did anything. Do I think it's going to rally today? Probably. Do I think it's going to sell off today? Probably not. But I don't like where I can get in, and I don't have any gauge of where it could go. So in those modes, I just kind of sit out. So if you guys are actually, well, if you don't want to tell them about the extended trial that we're doing on this course we just started, Ash and I launched it yesterday. If you guys here didn't know, Ash and Nolan and I have joined forces to combine our powers to create a super course. Ashton is one of my favorite options people on the planet. I trade futures, stocks, options, everything. But if you want to give them a little information session about that, I'm going to kind of get back to the market. But we're doing a training course. We started on Monday, and it's a 6-week course, and the extended trial allows you to take part in that for 3 months so that you can catch it. So, Goff, if you want to talk about that really quick. What? He asked me to bring it up. Yeah. Oh, yeah. Sorry, guys. We're in a podcast this morning. I have an overall bearish thesis. Going into next earnings season, I did, but I need to get the new COT data coming through so I can take a look at that. See how it works? Yeah. This one right here. See that V-shaped move? Still didn't take it. Like I said, catalyst days, a lot of times there's like to sit out and let it move. As I was saying on the stream today, you're going to see short squeeze, short squeeze, short squeeze. Anytime you dip irrational on a catalyst, it's going to do random stuff. And you may feel like, okay, I'm missing out or you're missing out. The market's gone absolutely nowhere for the most part since yesterday. Do I think we can go to highs today? Yeah, but it's not worth me. I don't want to trade any of it. And I like to just kind of sit out and let it watch. Anytime you're irrational, you assume that your tools are going to lag or not lead. One of the two. Depending on your stance. My stance is I'm assuming it's not going to lead. So you can see that the index was moving before the stocks moved, which means the index is getting squeezed and not the stocks. So right now, it's like these days, don't think you're missing out and don't think that you're going to learn how to gamble them. Even if I were to trade, it'd have been really small. It would have been a couple of contracts. I'd have made 60 bucks and called it a day. But in reality, if I know I'm going to trade small and I'm also busy and I've got nothing to guide me, I just don't want to take anything. So when markets are rational, we use the liquidity map. So let's do a cool little trick. Let's go through a couple of scanner settings, right? We take liquidity map with a grain of salt whenever the market is irrational or even a hint of it, right? I'm going to find stocks that are right on that break point. Hedge pressure. I'm looking for ones with high volume that look pretty good. Snap. Right? So, example is Snap right now is showing a BLU. Actually, let's pick a better one that hasn't moved yet. Disney. Okay, so answer some questions. Wait, so VXY make it irrational in a zone? But it also breaks hedge pressure. So today will always be irrational. Schmed, absolutely. You nailed it. Isn't that crazy, right? You're right. I forgot to mention that. Yeah, we have no window of opportunity today on UVXY. I get so distracted because of all the million things I do on these podcast mornings that you're right. I'm like, what kept me out again? Oh, wait, UVXY. Right. Irrational all day long. Perfect. You nailed it. Bartending trader, how come liquidity map look different? Should they look the same? No, absolutely not. They are different instruments, right? And so they are based on their own risk. You can put the two of them together for a super strategy on QQQ. You can put two liquidity maps together to get an overall NASDAQ look and feel. Because this instrument, people will buy and sell this thing. One firm could own 1 trillion shares of this thing and own 0 shares of this thing, and it won't reflect in one or the other. So you could put the two together to make a super strategy, and that's one of the things we do teach as well. Does that make sense, bartending? So if an example is QQQ's at a liquidity pocket, okay. So this is the end of the day anyways if you were trading, or if I were trading it, sorry. And while TQQQ has a hedge pressure right here and a move and no liquidity pocket, they'll be similar, right? But you might see hedge pressure, one of them way up here and hedge pressure way down there, and two completely different trade plans. And you can actually watch the NASDAQ in general pivot between these two instruments, because they're going to be people that are going to be trading one against the other to find that arbitrage or to match whatever they're tracking. So it's like a super strategy. My overall bearish thesis in general, it's not bearish, it's just not bullish. I said the bear market is back because of the positional data. It means that if we exhaust buyers, which I said that back here, by the way, I said if we don't find new buyers or we exhaust buyers, then this is bearish. When you have dealers and hedge funds fanning out red versus blue, like in this kind of V-shaped alligator open mouth look, and they're both below 0, the moment this green line is coming down, the market's selling. There is no mechanism to keep the market not selling off with the exception of finding new buyers. If dealers are becoming more and more long holding the bag, but still negative, They're just getting out of their shorts and going to neutral. You're saying, so right now it's longs versus shorts as quickly as that. And there are people entering the market and people entering the market short. So new longs, new shorts. There are people putting money back into stocks right here. So at this point in time, right here, Wall Street is now deviating. When the blue and green fan out, traders are entering the market. New shorts, new longs. Okay. So more people are putting money on the table. Any bad news that has longs exit, we will collapse. So you have to keep an eye on this. If you start to see green take another wave down, this is going to start taking waves down. Not crash, but like take waves down. So right now there are buyers being shown, but for whatever reason, the COT has not been updated in a couple weeks. And so we are sitting on January 23rd data. A liquidity pocket means bulls and bears are in balance. Come to the session today. I invite all of you to go to the extended trial and come to the session. You will learn a ton. In our Discord, you will learn each thing. These trading streams aren't teaching informational sessions. These are my trading sessions. So if what we do normally is here, I'll do my trading and then afterwards y'all come to Discord. And then we'll do a Zoom call where we'll train. So here, it's like a liquidity pocket's the middle between a bull and a bear zone. And it just means the market's found balance. And whenever the market's trading, no matter what it is, when it gets there, it's just the end of the day. So I don't bet. It's random from there, as we talked about yesterday. No, the market's 100% irrational, no matter what you do. It's one of those cool things. Watch this. We have two rules at once. Any hedge pressure break on either VIX or the indices, or anytime you hit a call wall on UVXY. It's a weird one, but it's a fun one. So no matter what, we're irrational on all fronts, as somebody had said. There is no window of opportunity. Once you hit this wall, it's when you break out of the gray. So if you're in the gray and you touch that gray boundary, forever it is irrational until you come outside of the gray. Okay. So check, it's outside of the gray, so that rule goes away. But anytime you break hedge pressure, it's also irrational. So from this moment in time, the day is over. And whoever guessed that right, 302 Schmed, exactly right. Isn't that crazy? So that's a caution for me to not do anything. Even though there's volatility in the market, has some tradability, I guarantee it was a gamble. And if you got it right, you gambled right. If you got it wrong, you gambled wrong. Is it normal that liquidity map changes? Yeah. If you move, if price is here, this will say B, right? Because it's bullish. If you break through, this updates in real time based on where price is moving. So if price has moved out of the bull zone, it will not say bullish anymore. That's pretty cool because you want to make sure that you monitor the changes in real time, you know? So while today one may say, well, you missed out on something. I didn't really miss out on anything. This is gamble trading. And so to preserve a shrink, right? 40% in 2 weeks. I wouldn't say I've missed out on anything. If I traded every gamble day, I'd miss out on having a career as a trader. That's for sure. It might not seem as exciting, but it's pretty exciting to me to not have lost a single trading day as I started streaming. A challenge. That's the exciting part. So I usually very cautious I trade. Other people here, Mavericks, you crazy Mavericks in here, love to trade irrational days. And like I said, if you've been trading, I do too, but I don't demonstrate it because it's bad form. Like, I'm not trying to be a daredevil on stream. I'm trying to demonstrate what a new trader should be doing. A small account challenge is demonstrating what a new trader might be doing. I don't want to risk anything as I'm building an account to 100,000, right? And that's the whole point, is that a small account challenge is for me to mimic and emulate like what you guys are doing. If you're newer, you're trying to build an account. It's like, I'm not out here trying to be a daredevil. Like, one hand hanging from the cliff, trying to pull myself up. I'm here demonstrating what you would do as a newer rocket scooter person member. When the market opened, you're very excited. I think I was just very excited because I was eating a Jimmy Dean croissant sandwich. And this my excitement came from that. Fun day. Okay, so what I want everybody to do, do me a favor. Matt B, I'm not making any rationalization about irrational markets, right? So doesn't UVXY want to do something? I don't make that assessment, right? Love that saying. Most people understand that. When the market opens, you're very excited. I was very excited to see that the CPI came out exactly as I predicted it. I said it was going to go up by 1.1 to 0.2 points or point. So I got that correct. That's why I was excited. So in the trading sessions, Roy, on Discord after live trading, yes. So after the day, we will start a session on YouTube, and then that goes into the Discord, and then we chop that up, and we'll make it into the training session videos that then go into the new like static trading program. So our training program is gonna be super cool. It's gonna have all this fun stuff. We're designing all the pieces of it now, but it's gonna have prizes and games. I mean, it's gonna be fun. Just playing along is gonna be worth your time. I want everybody to check it out, the extended trial. If you are in the free trial, you will not get any of this. In 7 days, you'll be kicked out. You have to join the free trial or the extended trial before we close out or join the program. So those of you who may have joined a free trial, you have to upgrade to the extended trial to get all the features of this program. The free trial does not unlock everything in a Discord. So I think if you came from like Matt's video or something, he mentioned the free trial. That's before we announced the program. And so we encourage all of you to go back to the same link you used and click on the extended trial. It's the $35 thing. That gives you the full unlock. The free trial just unlocks a couple of things. Yeah, that's our bad. I muted myself, Micah. I was eating a Jimmy Dean. Why be so kind to explain the mechanics? Actually, I'd love to. Let's do it today in today's session. So no trade today. Irrational no matter what. We'll talk about why that is in today's session. I want everybody to go here. Check out the extended trial. It's going to be a really fun thing. Like I said, it's $35 a month. If you're not in it... So in about an hour and a half, we'll do the session. So everybody just hang tight for a little bit. We'll still be live, but it'll be in Zoom. I'll walk you all through it, so don't go anywhere yet. Okay, we're going to bounce out of here. Come to the Discord. Remember, irrational days. Sometimes I want to just kind of like wake up and see that the market's not going anywhere. And I'm kind of okay with that, right? Today, you can see if you were watching the S&P, it went up, went down, went down, went up, and it's back to kind of where it started. And hey, you know, irrational days tend to be like that. But you know what I didn't do? I didn't lose money. We're trying to build a small account. If you know it's going to be irrational and you know it's going to go up or down, don't feel like you missed out. Feel like you made zero and feel like you lost zero. A lost zero is still a win, and that's what we teach you at Rocket Scooter, is that when you want to learn how to trade, when I knew I made it as a trader is when I was comfortable missing out, because then there's an opportunity every other day. But I don't have to come in and trade every single little thing that moves. If I'm a hungry wolf, right, I don't need to chase every little squirrel that's running every direction, because if I'm not looking, I'm going to miss that wounded pig and that big feast that's coming by. So I'm hungry, and I'm going to get the trade that makes sense, the career trade, not the gamble trade. And hey, a loss of zero is a gain of zero. So we'll see you guys in about an hour and a half. Join our Discord, link below, and we'll see you in a minute. Go to the extended trial if you want to join the program. I promise, lifetime, once a lifetime opportunity. You will not regret it.